Welcome back to another edition of Sunday School with your boy Buck Bandit P here on the Buck Bandit Podcast Network. You already know what it is, man. Let's get right into it. Before we get into it, you already know what y'all gotta do. Make sure y'all give me a like, thumbs up, all that stuff. If you rock with the information and you want to get more of it and you want to make sure that you tapped in and staying in tune with it, make sure you subscribe to the channel, hit that notification bell, man. But thank y'all for being here, and let's get right into this episode. You know why you're here, so let's get right into it. Today we talking about good debt versus bad debt. What is good debt and what is bad debt? Let's get right down into it because a lot of people don't understand the difference of this, and it's going to be so hard for you to try to build wealth if you don't understand the difference between good debt and bad debt. So let's get right into it. Why? Well, first of all, before we even get into that, you already know what we got to do around here, man. Let's break it all the way down to bacon bits. What is debt? A lot of people call it debt. Look, man, what is it? That's all we basically want to know. What is debt? That's all we want to. The United States is in debt. Everybody, debt this, that. What is it? I got you covered. I'm happy you're here. I'm happy you asked me that. I got you. So, all debt is future money that you have access to today. So, let's go over that again. All debt is future money that you have access to today. So, now, let's just kill the myths right now. People say, oh no, debt bad. Listen, this is why you hear it. It's such thing as good debt. But we already went over what that is. It's your future money that's available to you today. So the question you need to ask yourself is, how am I going to make this debt make me more money that I would make in the future versus taking money from me in the future? So that's the question you should ask yourself when it comes to debt. Is this going to put me behind later in life, or is this going to put me ahead later in life? Because it's future money that you got access to today. So let's break it all the way down. What makes debt good? What's the difference between good debt and bad debt? So let's break down the good first. I'm gonna give y'all the good news first and the bad news second. So what's good news? What's the good debt? The good debt is lower interest rates. A good debt is gonna have long-term value. Good debt possibly can give you income. So those are examples of good debt. And good debt, you could get a skill. You could gain skill or knowledge. That's good debt because you can make more off of the knowledge than what you paid to get the knowledge. And what are examples of bad debt? Let's get right into it. Oh, so before we get to the bad debt, I got to give y'all examples of good debt because I told you what they are, but now I'm going to give you examples so you can understand. So examples of good debt, like I said, gain a skill or knowledge, education. Education is good debt. However, go in the cop because I have a 17-year-old right now, and if y'all parents out there know what I'm about to say, I got a 17-year-old right now, and she about to go to college, and it's like, we looking at how much it costs a year. We seeing how much grants and scholarships she can get. And it's like, yo, this might be good debt, but you gotta go. You gotta know what you want to go for. You gotta be all in, and you gotta understand. You gotta have a plan and a strategy to pay this money back. Because how many of us out there, drop it down in the comments, that you still owe on student loans? Let me see your hand up in the comment if you still owe on student loans. Yeah, I'm one of them. Like, I owe on student loans too. So I wouldn't suggest just going to college for the sake of going to college. That's not smart. That good debt will turn into bad debt very fast if you don't have a plan to pay it back and a strategy and all of that. If you're just going just to go and then you're taking out loans and all that, you don't want to do that. But an example of good debt is education. That is definitely an example of good debt if you're going to use it right. Another example of good debt is business debt. You want to take out some debt so you can increase your inventory, increase your marketing, increase your staff, increase products and services. That's good debt because you're taking out future money, banking on the fact that you're going to make some more money that you got from this future money today. So you're going to make more money in the future because you got this money today. You're not going to take this money for your business and just spend it all and not add more to your future revenue. So that's an example of good debt, business debt. We see a lot of people do that. We'll get into that. Another example of good debt, real estate. We all know about real estate. And once I go on my journey with real estate, I'm going to share it all on here for y'all so y'all can see the process of how everything goes. Because real estate can be good debt because real estate is going to appreciate 9 times out of 10. Like over a 20-year span, we done seen what real estate did, especially since COVID. If anybody, my homeowners out there, make sure you drop it in a comment. Tell everybody how much your home appreciated in the past 5 years since this COVID. So like this is a real thing. So that's an example of good debt, like education, business debt, real estate. And the rule of thumb is if the debt can eventually pay itself back without you putting more money out of your pocket, then that's probably good debt. It might be something you want to take advantage of. What's up, mama? How you doing? What's up, CC? So I can see you, babe. So let's get into, I don't know. Let's get into what the bad debt is. Let's get into what bad debt is. And also, this is another good rule of thumb with good debt and bad debt. Don't fall into the interest rate trap. Do not fall into this interest rate trap where you're getting 20+% on these credit cards. It is a trap. They trying to trap you because they want you to be broke forever, but you deserve to be rich, so I'm happy you're here. 20% bad. 5% on student loans, good if we got a plan and a strategy to pay it back. We just not gung-ho taking out loans and all of that just for the sake of saying we went to college and now we gonna be 30, 40 years old still trying to pay these student loans back. You see what I'm saying? So that's a good rule of thumb. If the interest rate is higher, it's going to take longer to pay it off, and it's going to be faster for that debt to turn toxic, i.e. good debt to bad debt. So let's get into why bad debt kills investing. Bad debt is going to kill your investing because it forces you. We already went over this from the last episode. Make sure y'all go check out the last episode, man, on the emergency funds and why you need an emergency fund. And then after you watch that, go watch the other video on the 4 things you should have before you even start investing. So now that that's out the way, why debt kills investing? Because it eats your cash flow. You have to sell your investments too early. That means you're going to lose out on maturity. You're going to lose out on compound interest. And it keeps you paycheck to paycheck. It keeps you, every time an emergency pop up, that's why that emergency fund is so important. So bad debt is going to kill all of your momentum if you're trying to build wealth. I don't care how much money your business is making. I don't care how much money that salary is making. If you have bad debt, you are never going to build wealth. Having high interest on your credit, having high interest on your debt, having high interest on your debt and trying to build wealth is like trying to fill up a bathtub with the drain open. You see what I'm saying? Like at a certain point, you'll get, the water the tub will keep the water, but at a certain point, the water gonna subside because the drain is closed. You haven't stopped the slow leak yet, so it's going to be impossible for you to build wealth. You don't got an emergency fund, so every time an emergency pop up, you're selling investments like you're never going to build wealth. You're just going to keep yourself running around on a hamster wheel, and we don't want to do that. We building wealth around here. So the next part. How to use debt. This is the good part. You know what I mean? Everybody want to know how to use it. Well, what should I do? I got good debt now. I got rid of my bad debt. Now what should I do with it? What should I do? This is how the rich play the game. You never go into debt for something unless it goes up in value. You never go in debt for something unless it goes up in value. So that means we're not going into debt for clothes. We're not going into debt for cars that we driving around. Now you go into debt for a car for your business, that's different. You have a plan and a strategy to pay the debt back and still have the asset to produce the income. You see what I'm saying? So once you know these rules, like you'll be able to filter, oh, all right, that's good debt. All right, that's bad debt. All right, if that's something I really want, I'm gonna have to go pay for this with cash because I'm not trying to have the drain open while I'm trying to fill the tub up with my wealth. You already know. And high interest, we already went over that. High interest is going to punish you when you're trying to build the debt, because if you go heavy on your investing and you got high interest, You just doing this. You just gonna be transferring money to try to cover some stuff and selling your investments and using high interest credit to do so. And you're just gonna be shooting yourself in the foot every time. So this is a good rule of thumb. Your debt should expand your options, not limit them. I'm gonna say that one more time. Your debt should expand your options, not limit them. So let's go over this one more time, man. What is debt? Debt is your future money that is available to you today. And the question you should ask yourself is, does this debt make you more money or does it take money away from you? What's good debt? Good debt, education, business debt, real estate. The rule of thumb here is if the debt can eventually pay itself back, it's probably good debt. What's bad debt? High interest rates, no lasting value, and you ain't getting no skill or income from it. What are examples of that? Credit cards, buy now, pay later addictions, car loans that is way out of your income bracket. Not saying don't go get a car. Yeah, go get a car. You got to get back and forth to work. You want to take the family out, dude. But these $600 car payments a month are killing you. It's going to be so hard for you to build wealth when you spending like, how much is that? What, $6,000 a year? Yeah, you got to add that up. $600 a month. That's going to be about $7,200 a year that you're spending on your car. You could chop that in half, get a little lesser, newer car, couple years older, or pay for a car cash, and now you got a whole $500 to put into the market every month. $500 in the market every month. You already know. Go look at the episode on compound interest. $500 in the market in the month for 10, 20 years, you free. You bought your freedom. So that's a good rule of thumb, man. Don't buy stuff that you going to pay for later. And don't go for the high interest rate trap. The 20% is a trap. 5% is manageable as long as you got a plan to pay it back. And the higher the interest rate, the more toxic your debt can become. Next is why bad debt kills investing, because it's going to eat your cash flow. You're going to have to sell your investments too early, and it's going to keep you paycheck to paycheck, because every time an emergency come up, now it's going to put you a month behind, and you're going to have to work 2 months to get back to where you at. So that's why bad debt kills investing. And you also want to have that emergency fund. And how you want to use your debt, you want to never go into debt for something that drops in value unless you really have to. You want to not have high interest debt. You want to have no high interest debt, and you don't want to finance your lifestyle through your credit. Your debt should expand your options, but not limit them. And with that, man, I'm happy y'all here, man. The closing thought, man. Good debt should help you move faster. It should not have you running in place. I'm going to say that one more time. Good debt should help you move faster. Bad debt makes you run in place. The goal is not zero debt. The goal is intentional debt. Because we probably going to leave here owing somebody anyway, man. And a quick story, man, because everybody all hype. Oh, Jay-Z and Beyonce, what? They must be going broke. Why they keep taking all of these loans out? They borrowing all of this money. Oh, my God, I thought they was billionaires. Relax, you don't understand how the game is being played. When the game is played that's why I'm trying to get y'all to understand these babies, because all they are doing is what I'm explaining right here. They making sure their investments is staying in place so they're not losing that on that compound interest and that maturity of their investments, and they're taking loans against it so their assets can pay the debt back. Good debt. That's what they're doing. Jay-Z and Beyonce you know how many tax professionals they got on this? Like, trust me, they know what they're doing, because if they want to go spend some money and they got to take out, or they got to use credit or take out their investments, that's bad debt. What they'll do is they'll borrow against all of their assets, take out another, whatever. We're going to take this cash that y'all give us and we're going to use this to fund our lifestyle, because this is not going to get taxed on no capital gains from selling my shares or cashing out of a certain investment, because you get taxed on that money. When I borrow this money is tax-free that I borrow. So now I just skipped on taxes. I just funded my lifestyle for the next year, and I still have my assets in place. That's how the game is being played, and y'all don't understand it. Y'all think people go broke when they borrowing money and this. No, they playing the game at a whole higher, another level. But this is the kicker. You can play the game too. That's why we here. Like Jay-Z and Beyonce ain't doing nothing spectacular. Like, oh, well, I don't got $1 million. I'm not a billionaire. Me and my bitch broke. Listen, sit down, dog. Broke is just a moment of time, dog. Don't be poor. Poor is passing over opportunities repeatedly. You can be broke. I was broke, but I was never poor. This is an opportunity. This is an opportunity right now to figure out, oh, snap, this is what they do? Yes. Like I said, go to my other video so you can see the 4 things you should have before you start investing, and then come back to this. It only should take you about a week to watch all my videos. Watch all them joints. Come back here, and then we can start investing and getting the money, and then you can start borrowing against your portfolio and doing what the fuck Jay-Z and Beyonce do. This shit ain't rocket science. Nobody just taught you, and you think you can't do it because you ain't Jay-Z and Beyonce. That ain't the case. You just don't have the knowledge. It's nothing. Once I figured out this trick, it was like an unlock. I'm like, yo, I've been lied to all my life. Like, if I knew all I had to do was buy some assets, hold on to them long term, keep putting money into these assets, and I can borrow money against it and let my assets pay the loan back off, nigga, life changed. So I want your life to change too. So I'm happy for y'all for being here, man. Make sure you like the page. Make sure you subscribe to the channel. And also, if you want to get your free share of stock from Robinhood, make sure you hit the link down below. You get a free share. I get a free share. Everybody get a free share. You already know what it is. You trying to build your credit, hit the link down below. You need a high yield savings account. You get $100 when you open that joint up. Just hit the link down below. It's a bunch of, man, just hit the links down below. It's a bunch of stuff down there, man. But make sure y'all come back here next week because I got another episode next week. We're going to do cash flow. We're going to talk about cash flow and all that. Everybody wants to talk cash flow, cash flow, cash flow. So we're going to get into it. I'll drop a little episode on cash flow, man. Make sure y'all stay tuned. I'm probably going to drop something else on the new stocks I'm watching. Probably stocks to stay away from because the economy looking crazy. The market's still looking crazy. Trump's still doing crazy stuff, man. But we ain't worried about none of that. We ain't worried about what's going on in the White House. We worried about what's going on in our house. So with that, thank y'all for being here. And you already know what time it is, man. Let's go out here and get this money.